we're going to be talking with Samuel Ulloa, co-founder and CEO for Listo. It's a company, Listo is a company that helps and provides the Latino community in the U.S. with financial services, which is pretty interesting to talk about right now.
Happy to be here. Again, congratulations on a very well-run event. I'm going to go ahead and share my screen here with you guys. I think you're able to see my presentation now, right? Well, thank you again, Jeff, for having me here today. I'm going to be talking about, how Listo is leveraging AI to democratize access to financial services for the underserved communities, most notably the Latino community, which is one that I come from and very intimately knowledgeable of. Listo translates for smart and ready in Spanish. And, our goal is, we're a social mission driven company that's looking to provide a more inclusive way and access to mainstream financial services for these underserved communities. With that, just a quick background on myself. Samuel Ulloa, co-founder, president, and CEO of Listo. Listo is an AI-powered fintech platform. I'm a first-generation immigrant from Mexico. Grew up in a low-income community. My parents were farm laborers. And we had a constant struggle by not having access to credit as I grew up, which we'll talk a little bit about that later on. Obtained my bachelor of science degree from Cal Poly San Luis Obispo and an MBA from Stanford. Started my career working at technology companies like IBM and Apple. Then later joined the fintech ecosystem where I worked at Zoom. Zoom got acquired by PayPal several years ago. And I was part of the founding team that built a company called Opportune. At Opportune, we leveraged machine learning and AI to basically assess somebody's creditworthiness and give them access to responsibly priced credit. As a result of the impact that this company has had, it was voted Genius Company of the Year by Time Magazine, and that company went public several years ago. So been in the industry for a while now. So in a credit-driven economy, the credit scoring system affects almost every economic aspect of our everyday lives, right? Employment, for example, as part of the hiring process, they oftentimes do a background check, and in that background check, they check for your credit scores, right? And even while you are in a specific company, they oftentimes review your credit score to consider things like a promotion, right? It's a more common practice than one may think. And as we all know, credit obviously impacts your ability to get access to credit, loans, and so forth, right? In a credit-driven economy, that's extremely important and valuable. It also impacts your ability to even, get into an apartment or the price that you'll be paying on rent for that apartment. People with good credit scores will potentially get into an apartment or pay less than somebody who may not. It actually impacts whether or not you can turn on your utilities, right? Since the utilities are usually paid after you've consumed those services. The utility companies are in essence issuing credit to these consumers for those services ahead of time. And finally, believe it or not, it actually impacts your ability to get access to affordable healthcare. So it's very, very impactful, specifically for these underserved communities that are struggling to make ends meet. Yet, despite that, nearly 1 in 5 Americans are credit invisible, have thin credit files, or lack a credit history, right? As a case in point, the US Latino market is large, rapidly growing, representing 12% of the US GDP, or about 2.6 trillion in purchasing power, and it's growing about 4.5x faster than other ethnicities. Yet Latinos are almost twice as likely to be credit invisible or have unscored credit records, right? If we double click on that and take a closer look at what's driving these credit score disparities, right? As one might realize, somebody who has a good credit score would be somebody who, has had that opportunity for credit. They've made on-time payments, right? Which according to FICO, 35% of their FICO score is dependent on this one variable alone, the on-time payments. But to make on-time payments, you have to have the opportunity to start with a credit relationship, right? Other factors that impact your credit score are things like having a good debt to credit limit ratio, i.e. not being over indebted on those credit lines, and having a good thick credit history. What does that mean? It basically means that you've had credit trade lines for an extended period of time. And and a good mixture of those credit lines, i.e. everything from installment loans to revolving credit, and ideally mortgage loans and so forth, right? On the left side, you see folks who have a poor credit score. And as you would imagine, it'd be the opposite, right? These are folks who have had opportunity for credit, have thick trade lines to make a distinction, and they've had really poor repayment behavior, right? And some of them even bankruptcies. The challenge is in that in the middle, there's this very large segment that's in the gray area. These are folks who have little or no credit history whatsoever. The source of the problem really comes from having limited data on these customer profiles, to where the largest institutions, like Equifax, Experian, TransUnion, don't know necessarily how to rank their risk profile. Unfortunately, they always sway on the conservative side and categorize them as poor or high risk, right? This is basically synonymous to giving a student an F on a test without giving them the opportunity to take it, which you and I can agree it's not a fair way of doing things, right? And unfortunately, this process disproportionately affects, communities of color and underserved communities. The underlying problem here is that mainstream credit scoring models rely on formulas and algorithms that fail to consider cultural norms, i.e. such as a reluctance to accumulate debt, which is often common in the Hispanic culture, or a reliance on cash, which again is often a common practice for folks in the Hispanic culture. And the credit history from other countries is not imported. So immigrants who are recent immigrants into this country, refugees and such, they don't have the benefit of transferring over the years of data that they've had in the credit bureaus in their foreign country, right? And finally, there's a failure to account for other methods of making on-time payments for this population. This keeps these individuals out of the financial mainstream. Thus, communities of color, low-income consumers, young consumers, and immigrants are left out or left behind by the current scoring algorithms that we use today. We take even a deeper look, right? This problem extends beyond just the credit problem, right? Where these consumers are misclassified, right? It actually impacts mainstream, these algorithms impact folks in the auto insurance industry as well, right? On the right side, you see folks who are or qualify for preferred auto insurance rates. These are customers that you would, or drivers that you would consider good drivers, right? They have good driving records. And believe it or not, they have a good credit score too, because in most states in the United States, insurance carriers are able to use your credit score to underwrite your risk score on the driving side as well. On the left side, you have what's called non-standard auto insurance. This is typically reserved for folks who have had the opportunity to drive. There's a thick driving record and they simply haven't been the best of drivers, right? These are folks with a lot of traffic citations and even some DUIs. And again, similarly to credit, a very large segment of the population sits in the middle, sort of in the gray area, right? And the problem again stems from a lack of access to data on these consumers. These are folks who have thin or no driving records, i.e. recent immigrants, young drivers, or even folks who haven't established a credit score, as we talked previously. Again, we feel like it's very unfair to classify these as non-standard or high risk when in fact we haven't given them the opportunity to see how well a performing driver they are. But the industry basically sways on the conservative side, and they often bucket these guys in the high risk non-standard bucket, when in fact a lot of these are preferred or good drivers. So what's Listo doing about it? At Listo, we're building a risk score that provides a more inclusive and fair approach to assessing risk. So Listo's alternative credit scoring methodology leverages Listo's deep data insights and knowledge on the Latino consumer to more accurately score, underwrite, and build loyalty with that customer base as they evolve up the financial ladder. The circles you see here, you see 4 ring circles, right? And basically segments where people are bucketed on from a credit risk perspective, right? We talked about the outer ring, which are folks who have, thick files, whether good or bad. We've had plenty of opportunity to prove their credit worthiness. These guys would typically be bucketed as prime, meaning good credit scores, or subprime, meaning bad credits, right? The area where Listo adds a lot of value by leveraging data, right, and machine learning is these inner circles, right? These three inner circles that we talked about. These are folks who have thin files. Basically, a thin file is you have some trade lines in the credit bureaus, but it's just not enough data for the, the big credit institutions to be able to score you, right? And therefore, they're constantly misscored, right? A lot of these guys end up getting a lower FICO score when, in fact, they deserve a much higher FICO score, right? Then you have the other inner circle, which is people who have no score whatsoever. These guys are classified as invisible. There's just not enough data. They've started a relationship with the credit bureaus, but there's not enough data to even come up with a FICO score, right? Or a credit score. Then finally, the folks in the middle that are no hit, which, believe it or not, it's a very large segment of the population as well. It's very material. These are folks who don't even exist in the credit bureaus, i.e. recent immigrants, maybe even some young folks that are starting to move up, right? And again, Listo's approach leverages data and machine learning to help these populations get what they truly deserve based on their true risk profile. So as we proceed here, what exactly is Listo then, right? So Listo is an AI fintech platform that partners with financial institutions, banks, to provide a more inclusive access to affordable credit, insurance, and other products alike. We do this for the underserved population, most notably the Latino market, which enables them to then achieve the American dream, right? We are basically part of a two-sided marketplace where we do a really good job engaging the underserved consumer in their language in a way that establishes trust, right? In a very authentic way. And we bring on, responsible companies such as banks, financial institutions, credit unions, insurance carriers that have good product, right? But could benefit from our ability to acquire the customer, but then also use our machine learning and data to help underwrite these consumers in a more equitable and inclusive way, thereby adding value not only to the consumers, but then also to these well-intentioned institutions that want to be more inclusive and grow. So Listo's core product offerings center around three key aspirational and fundamental pillars that are gateways to what we deem provide a path to financial prosperity. The first of that is that we offer the ability and opportunity for these consumers to build credit by meeting them at a point of need when they need money to cover an emergency. And in doing so, we offer responsible loans that are 7 to 10 times cheaper than the closest alternatives. In that process, we also help them protect their hard-earned assets and save money by offering them transparent, affordable insurance, such as auto insurance, which I talked about, and even life insurance. Finally, we harness that credit score that we help the consumers build over time and the savings that they've been putting away by making smarter decisions, right? To then invest in the American dream, which is potentially be considered for a homeownership, or even an investment in their small business, an IRA account for retirement, or a 529 to send their kids to college. The customer journey is one that could be described as a bridge, right? Whereby by leading with the loan, right, and building our customer's credit profile, we can oftentimes take a consumer who doesn't exist in the credit bureaus, i.e. a no hit or a thin file, and over time build their credit scores up to about 600 or above. And in that process, help them save money by making smarter decisions around their financial choices, such as getting a cheaper auto insurance policy that will give you the same coverage at a much lower rate. Up the financial ladder, because as we all know, the American dream is live, yet it's extremely difficult for middle America or working class Americans to achieve. And Listo's here to make that difference. As the youngest and fastest growing segment of the nation's population, Latinos' economic opportunities will have a significant role in shaping the nation's economic future. And we believe that the credit scores and credit visibility will play a fundamental role in enabling that. So in summary, a stronger economic future for America will definitely require a more inclusive and equitable America today. And we feel that Listo is doing our part to make that difference.